Hello, happy spring, everyone. It's Michelle and Warren coming to you from Mortgages to give you an update on some of the things that have happened since we last were able to have a chat with you. It's spring. It's not a very nice spring day today, but it is spring. And just in time for the spring market, the government announced a new proposed plan so that they could help first-time homebuyers specifically with affordability of home ownership. The objective of which is to spurn the housing market, so sales are going to go wild after you learn about all the fun things that they've introduced. So we just wanted this forum today to try to break it down and make it simple. We got super creative on the technology side, and what were we able to do, Warren?
We'll show you in a minute.
We'll show you in a minute. It's going to get more and more exciting with every passing day. So anyway, the government announced a new budget plan to help affordability. There are 3 components to it. And the first component of it is
the RRSP, first-time home buyers privilege. So as it pertains to what you're allowed to withdraw from your RRSP, today as it stands, you can deduct $25,000 if you've been able to save that much money in your RRSP.
First-time home buyer.
As a first-time home buyer to put towards a down payment on a home. That limit has now increased to $35,000 effective whenever this September budget implementation goes in. So you'll have an extra ability to withdraw an extra $10,000 if you happen to have that much built up in your RSP portfolio to put toward as a down payment.
So the first ease of affordability is that you're allowed to now withdraw $35,000 of RSPs.
That you saved yourself.
That typically you don't have when you're a first-time home buyer. So that would be a win as far as a new initiative or government incentive is. There's one distinct benefit that I see with this increase to the RRSP privilege, and that being that they've extended it to people who are separated, divorced, in that they can re-qualify technically as first-time home buyers with regard to this RRSP withdrawal. So that is a big benefit. I think that will help certainly in the unfortunate circumstances where you do have separation of family and they would have acquired assets likely to the tune of $35,000 in their RRSPs. Yeah. So from that perspective, it's a good thing, but really this initiative was launched to help first-time homebuyers, and I don't have too many first-time homebuyers that have $33,000 or $35,000 worth of RRSPs saved up.
No. Not an RSP, sometimes in a tax-free savings account, but a lot of what we're seeing right now is gifted money and that sort of thing. So it remains to be seen how much.
It needs to be your RRSPs, not your giftor's RRSPs.
This is true.
Like not mommy and daddy, it has to be your own. So anyway, that's the first initiative that they've launched. The second initiative is what you're going to see on our fancy schmancy part 2 now. So part 2 of the proposed changes in this new government bill to make home ownership more affordable involves CMHC. So as all of you know, or all of our existing mortgage clients, whenever you have less than 20% down, this is just normal, everyday, day in and day out, CMHC steps into the picture. CMHC is there to ensure the overall mortgage for the lender when you have less than 20% down. It's an insurance that you pay for as part of your mortgage, but without it, you wouldn't be able to own a home. In this scenario, CMHC is basically proposing 2 ways that they can assist in making home ownership more affordable. The first of these has to do with resale homes. So resale homes, CMHC is proposing to lend you up to 5% of the purchase price to help lower the overall borrowing costs and make it more affordable. So let's compare the current day rules with the new proposed assistance just to see what this great benefit is. So today, if you were walking into my office, this would be our normal scenario. We're buying for $400, we're putting 5% of our own money down, which in this case is $20,000. The formula shakes out as follows. 400 minus 20 gives us our 380 mortgage. The typical CMHC premium at 5% down would be $15,200 that they add back, and your total loan now becomes $395,200. This amount carries for approximately $1,870 a month. In the new proposal, CMHC says, homeowner, we're going to help you, and we're going to give you the equivalent of your 5% down as well, interest-free, so you don't even need to pay us interest on it. Ha ha ha. You'll pay us interest on our premium, but you won't pay us interest on the down payment.
Oh, I'm sure we'll pay somehow.
We will. Absolutely. So, Warren, why don't you take us through this?
Yeah, absolutely. So as Michelle said, the CMHC is going to step in and give an additional 5%, rendering the total down payment available of $40,000, lowering the required mortgage on this loan to $360,000, lowering the required CMHC premium to $1,160, and lowering the overall loan for the same purchase price to $371,160. As compared to the scenario above, where our loan is $395,200 and payment is $1,870, we have approximately $114 a month lower payment in the CMHC interest-free loan scenario below.
Okay, I think maybe I'm just going to jump in there because we may have not made it completely. So the $395,000 mortgage in Visual 1 carries for $1,870 a month. The $371,000 lowered mortgage carries for $1,756 a month. So it's that difference that is amounting to $28 a week, and thereby making home ownership more affordable for the average Canadian person. What do we think about that? $28 a week, like seriously? Should you be owning a home if you're down to that line?
Probably not.
Probably not. And first we have to find a home that's worth $400,000.
Exactly.
Okay, so that's the first proposed change from CMHC. The second proposed change has to do with new construction homes. So given that new construction homes are typically more expensive, both in their closing costs as well as in their overall take-in costs, so you have to put your own driveway down and your window coverings and just all of it. It's just altogether more expensive, and builders these days, I think, require you to give at least 10% of the purchase price down, if not almost 15%, just during the build phase.
Mm-hmm.
So for that purpose, CMHC has said, don't just wait, homeowner. We're going to make this more affordable for you. So whereas you would normally maybe have only had 5% down on a new construction home, today what are they going to do for us?
They're going to give us 10% interest-free loan versus the 5% in the resale scenario.
So our down payment goes from 5% down, which in our first example shakes out as follows. So we've seen these numbers before. We go through and our new mortgage carries for $1,870 a month. Now steps in CMHC and gives us another 10%. So we have 15% down now, which is $60,000. Let's see how that shakes out. 400 minus our 60, we have a 340 mortgage, plus our typical CMHC premium brings the total loan amount to 349,520. What does that carry for, you ask? 1654 principal and interest. What's that difference? $216 a month or $54 a week. So, affordability? Yeah.
I just am trying to figure out where we're going to find a new construction home for $400,000.
Okay. But that's beside the example, so we have to get off of that one. So that's sort of the second phase of this new government plan. So the first is the RRSPs, the second are the application of these interest-free loans to either resale or new construction homes. How do we know whether we qualify for this or not?
But wait, there's more.
There's always more.
So the government has imposed a few restrictions on who can qualify for this interest-free loan. The first of which is the loan that they're trying to calculate caps out at 4 times your household income at a maximum of $120,000 household income. So if we're looking at the maximum, your mortgage amount under this program, if with $120,000
household income times the 4 equals 480,000. So your mortgage cannot exceed 480,000.
To be part of this generous interest-free loan.
Correct. So that takes out most of the major centers in Canada, Vancouver, GTA in general.
We just want to give you an idea of what that means in terms of purchase price. So if this were a resale home scenario and you were putting the maximum purchase price becomes $518,000 in order to achieve that $480,000 top of the line mortgage. So what happens if your income isn't $120,000? Do you still get $480,000?
No, sadly not. So your household income is $80,000 in this example. Times 4 means your maximum mortgage, including your CMHC premium, is $320,000. So your net purchase price becomes $345,000.
Okay, so we're not really sure how many people will be able to take advantage of this. I think certainly in the GTA, and that would be almost not achievable just because of price points. I guess this is more for outlying
cottage country. Northern Ontario certainly will be able to benefit from this in some small way. So it's not an absolutely terrible program. It's just not as fantastic as the media is making it out to be. And we'll offer some more commentary on that as we shift back over to our green screen.
So we're back. I know the slides, but it was kind of fun doing that. Just imagine what we can insert going forward. So we have 3 changes. What are they, Warren?
Increase to the RSP deduction limit from 25 to 35,000.
Check.
Resale home, the government will potentially kick in up to 5% of the down payment, 10% if it is a new construction home.
So home sales with this initiative
are going to go through the roof.
They're going to go through the roof. As obviously, I'm sure you will agree with us. And that's to say, this program only is slated to start in fall of 2019. So we still don't really know all the final fallout of this, but that is the program. And we still don't know the details of the repayment. So typically, as we know, government repaying the government, who knows? Anyway, that's our message for you today. We just wanted to spell it out. We hope we've made it clearer rather than more confusing. And for now, we're going to let you go. So take care, everyone. Until next time. Mwah.